This one decision can have some really nasty tax consequences and could potentially undermine or void the limited liability protection you're seeking. That one decision, should you form an LLC or a corporation? Both structures hypothetically provide limited liability protection, but corporations are much more complicated. There's a lot of things you could miss. And if you don't follow the corporate formalities, those corporation formalities, your limited liability protection could be significantly undermined, exposing you to liability personally. After consulting with thousands of entrepreneurs and forming over 80,000 companies through LLC, attorney.com, I've seen the same mistake made over and over. And let me be clear, LLC is not limited liability corporation. I heard someone on TikTok say that just the other day. It's a limited liability company, different than a corporation. Those are two entity types you form at the state level. In the next 8 minutes, I'm going to show you exactly how to avoid this error that many new business owners or entrepreneurs make. First, I'm going to be upfront. You may not know this, but you can't trust everything you see on the internet. There's a lot of garbage advice out there about business structures. There's gurus who say, go out there, just form an LLC, just form a corporation, just form an S-Corp. That's not a business entity type, by the way. They do not understand your specific situation, and the cost of choosing the wrong structure, forming a corporation when you needed an LLC or could have benefited from an LLC, forming an LLC when you really needed a corporation, it can be very costly if you don't choose the right structure from the beginning. Now, don't be afraid watching this that if you've messed up, admit your mistakes, huge part of being an adult, you can change it. You can convert your business entity from an LLC to a corporation, but hopefully you're watching this video before you've gotten started and looking for clarification, and we're gonna go into the details and help you arrive at that right decision before you get started. Taxes, okay? There is a big difference in the default classification and tax treatment of a limited liability company and a corporation. When you obtain an EIN from the Internal Revenue Service, if you check the box saying this is a corporation, the IRS will issue you a C Corp tax classification. That is the default. C Corp tax classification means that the corporation itself will owe taxes on its profits. In LLC, if it's a single member LLC and you apply for an EIN, the default classification issued by the IRS is a disregarded entity, which means from the perspective of the IRS, we don't need to know nothing about this company. You will just report that income on the taxpayer, that's you, on your personal 1040 return. It's a pass-through entity. If it's a partnership, meaning it's got more than one, it's got two or more owners of that LLC, the default classification is a partnership. That too is a pass-through entity, but it has a requirement to file a partnership return and issue K-1s to the owners. But in those two cases, the default classifications for an LLC, no tax is paid at the entity level. The problem with corporations, if you don't want that C Corp tax classification, is that they have double taxation. That means the company will pay a corporate tax, and then you, if you get a dividend from the company, will pay tax on that dividend. So why would someone choose a corporation? Well, there's a lot of benefits to having a corporation. That C corporation can have retained earnings. If it retains its profits, right, it doesn't pay them out immediately to the owners as a dividend, then it can potentially have a lower tax rate than the owners would have if they took that money out, passed through, if the cash passed through, the profit passed out to them on their personal tax return. So there's an advantage there. Another advantage of corporations is that if they have losses, they're called NOLs, net operating losses. You can accumulate those losses in the corporation, and then when you have profits in the future, you can avoid taxation on those profits because you'll be knocking out those net operating losses. So if you're planning on reinvesting the profits back into the business, a corporation or at least a C Corp tax election may actually save you money as opposed to having it come out, get on your personal tax return, and then investing it back into the company post-tax. So corporate tax rates can be lower than personal rates on reinvested earnings. It's going to vary though based on your situation, depending on your personal income situation. I mentioned earlier S Corps, right? I formed an S Corp. No, you didn't. There's no entity type at the state level called an S Corp. An S Corp is a tax election. You can have an LLC that elects to be treated as an S Corp, or you can have a corporation that can elect to be treated as an S Corp. The benefit of an S Corp is that it could potentially reduce your self-employment taxes. They're also known as FICA taxes. Because the S Corp pays you a salary, the reasonable salary is subject to FICA taxes, but the amount above that, it's a distribution, is not going to be subject to those FICA taxes. But there is no taxation at the entity level. Remember, the C Corp pays its own taxes on its profits. So the optimal tax structure for you is going to vary. What you do need to know, though, is that an LLC or a corporation can choose their tax classification. That's the important part about this. You don't need to be a corporation to benefit from C Corp tax status or S Corp tax status. The next part of this analysis, right? We've separated business entity type and tax classification. There's the default classifications, but you can choose. But when it comes to limited liability protection, for some reason, people think that corporations have better limited liability protection. But the reality is that they don't. Hypothetically, a corporation can provide superior limited liability protection, but it comes at a really high administrative burden. The LLCs, great limited liability protection with a much lower administrative burden. So it's easy to maintain the limited liability protection with an LLC, and with a corporation, it may not be as simple. So that key difference again is, what does it take? How much effort do you need to put into the company in order to get that protection? Corporations require more formalities because corporations have shareholders. They've got a board, they've got officers, they've got bylaws, they have subscription agreements, they've got investor agreements, all these sorts of things. There are boxes you have to tick. There's things you have to do to make sure each of those corporate formalities are actually done correctly. And if you skip the formalities, poof, piercing the corporate veil becomes very easy. Do you want to focus on your business, or do you want to focus on corporate formalities to get that limited liability protection? Well, here's the beautiful thing. LLCs are going to have much lower administrative burdens for you because the formalities demanded by the limited liability company laws are much lower. Limited liability protection with an LLC, if it's a member managed LLC, there's only one set of people to worry about, right? You don't have a board and shareholders and officers. You've just got the managing members. Those are the owners who also run the company. The critical issue here is that if you don't follow the formalities, you're jeopardizing that limited liability protection. So if you keep business and personal finance separate, you're getting the business bank account, you're doing the things, those basic things that we talk about with ensuring limited liability protection. If you got an LLC, you're going to be in really good shape. But with a corporation, it is going to take much more to deliver on that limited liability protection you're seeking. The good news is, I talked about earlier, you can change. Right? You can change your entity type at the state level. You can change your tax classification at the federal level. And your long-term vision for the company, I don't want you to let that cloud what's happening today. You've got huge plans. You're going to go the founder track. You're going to get VC investments. You're going to do this. You're going to do all those things in the future. Well, I should form a corporation today in Delaware. Well, are you going to want to focus on that high administrative burden and pay the high cost associated with having a Delaware corporation when it's just you now? You've got $1 and a dream. Let's see what happens. Starting out small with an LLC with pass-through tax classification with the disregarded entity status. As you build a partner, maybe it becomes a partnership. As you then are seeking to raise capital from friends and family, maybe you do a conversion into a corporation to be able to issue different share classes and get more complicated on vesting schedules and so on and so forth. And then maybe when you're ready for those venture capital investments, you move the company to Delaware. All of these things are possible, but in the early days of a company, focus on your business, not administrative burden, and not having more complicated tax filings to make and potentially paying more in taxes and all of these other things. So this is common sense advice. Almost everyone I talk to starting a company should have an LLC. There, I said it. I may be wrong. If this is your third company, you absolutely know what you're doing. Go form your Delaware corporation, but the overwhelming majority of people should start out with an LLC with pass-through partnership or disregarded entity tax status, and then go and adjust your plan from there. It's complicated, right? It is not a cut and dry, one size fits all solution. I say most entrepreneurs should have an LLC, but everyone's situation is different. The C Corp tax election, the S Corp tax election, the LLCs, the corporations, disregarded entity partnership. I understand this may be the first time you're hearing these things. And the good news is our business success partners can help you. We've got internal teams who could share with you information and other videos that we've done. You can talk to an attorney or a tax advisor first before getting started. And really, we are there to help. And if you found this helpful, hit subscribe for more straightforward business advice from an attorney without the hype that you see in all these other places. Stay tuned for our next video.